Do you want more for your money?
We're way easier to join than you think.
At a credit union, anyone can become a member. Make the switch to a credit union today. Open your eyes to better banking at Financial Partners.
Good morning. COVID-19 has impacted all of us in a very personal way. Beyond our own self-preservation and health of ourselves and our families, I think the key issue is how does it impact our world in terms of the business that we're in and how it might basically impact our local governments and other economic activity that is surrounding us. So this year, the fourth annual economic forum, I think is more germane than any, and I think it's proven by the fact that we've got so many people who are participating in this. I know that we've got a lot of our fellow credit union leaders online, so I want to give them a shout out because roughly the 300 credit unions state of California have helped 575,000 Californians over the last few months. $15 billion in loan deferments have been processed by financial organizations of our type, the credit unions, and also $75 million in emergency loans have been provided. Those are very low interest loans that are provided to consumers. Additionally, we have participated and provided $720 million in PPP loans during this time that have helped save thousands of jobs in California. So all in all, I think that we're very excited to be part of the solution that we all are dealing with. Chris Thornberg, and I think consider him not only as a scholar, but also one who can really break things down in practical terms. And we've had the pleasure of working with him for the last 10 years. He's been a constant presence at our strategic planning meetings. And last 4 years, he basically, we had a conversation and we decided to start this, which I think has really proven valuable. Welcome, Chris, and I thank him for participating. Appreciate it.
And good morning, everybody. It is a pleasure to be here. Certainly, you probably all have heard the ditty, of course, about the Chinese saying, "May you live in interesting times." What people don't appreciate is that saying is actually a curse. And in fact, we live in very interesting times. There's certainly a lot to talk about in terms of what's happening. And let's go and get right into it. So February of this year, this is one of my end slides or starting slides from a presentation I did back then. And the reason I'm showing you this is to kind of think about how we ended up where we are today in July of 2020. Of course, at the beginning of 2019, 80% of the economists who would contribute to the Wall Street Journal Next Recession Survey were discussing a recession by the end of 2020. I didn't think that was right. The things that they were talking about back then, they were worried about interest rates and inflation going up sharply. They were worried about real estate collapse. They were talking about how the Chinese trade war was going to demolish U.S. manufacturing and so on and so forth. None of that struck us as true. The fundamentals of our economy were in great shape, and we didn't see it happening. And in February, we were on a little bit of a victory tour because, again, in the start of 2019, 80% of economists said we were going to have a recession by the end of 2020. In the beginning of this year, it dropped down to a mere 11%. But of course, over in the left-hand corner, you could see the wild card. At that point in time, it was the novel coronavirus as opposed to COVID-19, as it's more generally known. It had obviously been quite problematic in China. There was signs it was spreading outside China. And while we knew something was going on, no one really had a good sense of just how dramatic it was going to be. And here we are in July in the midst of, yes, another recession. The question is how bad of a recession and where's the economy going to be in the second half of the year? Now, if you think about the headlines, you're probably hitting the panic button and are ready to just bug out, go find some quiet island in the middle of the Pacific and just wait this thing out for the next 5 years. To take this and give you a little bit better sense, here's the CBO forecast. and focus on that higher line, which is the quarter loss in real GDP. This is the trend we were on versus the trend they predict we will be on. And despite the fact that they're talking about a recovery from the bottom we hit in Q2, they're still, again, talking about economic output not getting back to normal levels till 2028, 8 years from now. But before you let that get into your head, take a step back. Because one of the things that's been a centerpiece of my conversations about our economy and about our conversations about our economy has been this. When any kind of conversation is had, hysteria is the new normal. You cannot let this stuff get into your head because we are not in that kind of downturn. Has there been a collapsing financial bubble? No. Has there been a massive financial bubble in the U.S. economy? No. Did we see this coming a year away? No. In fact, as much as this is an incredibly large negative shock to the system, it's not a traditional business cycle in any way, shape, or form. And indeed, it is nothing like a financial bubble business cycle, which is the worst of the worst. And for me, all these folks who are leaping to the worst possible conclusion that this thing is incredibly bad, they are making assumptions, leaping to conclusions that just don't make sense. They just don't. This is not a traditional business cycle. It's just not. Business cycles typically occur when large negative shocks hit the economy and create massive disequilibrium because of that shock. This shock that's hitting the system is certainly huge, is creating disequilibriums, but the shock is inherently temporary. This is what's typically seen in natural disasters, such as Hurricane Andrew, destroying the Miami-Dade region, or even the Northridge quake right here in LA. We just don't know. How bad will the shock be to the system? Depends on 5 questions. How healthy was the economy prior to the pandemic? After all, if the economy was a mess, this would absolutely be the camel that not only broke the camel's back, but probably ripped it straight out of his back and threw it off to the side someplace, right? How much of the economy has actually been hurt? I get it. You look around, restaurants are closed, kids aren't going to school, but how much of the economy is actually closed? That's an important question. What is the government doing to intervene? Huge question, because if they do very little, that makes it worse. If they do it better, that makes it better. How long will the pandemic impact economic activity? That's a big one, because as we know, we're in the midst of a second surge. We'll come back to that last. And then last but not least, will there be a major shift in post-pandemic spending patterns? Answer these 5 questions, and you'll have a good sense of just how rapid a recovery will be. So let's go through them really quick. Number 1, how healthy? Well, the economy is fine. It's our heads that are a little messed up. For all the dismal outlooks, for all the predictions of recessions, the reality is things have been fine. 2019 wasn't an exciting growth year, but it was a good growth year, a little over 2% in real terms. Consumer spending pushed us forward, a little bit of a pullback in business spending. Trade deficit closed a little bit, which is good news. But again, a perfectly reasonable year. Indeed, one of the biggest problems in the U.S. economy was a lack of available workers. For 2.5 years to the run up to the pandemic, we had more job openings in the U.S. economy than people looking for work. In terms of consumer balance sheets, where were we? Well, prior to the Great Recession, remember, people have been encouraged to excessively spend because of housing market dynamics, because of crazy lending, and the savings rates had dropped from, an already low level of 6% to all the way down to about 2.5%. Well, prior to the pandemic, it had gotten back to about 8%, the highest it had been in 30 years. Debt to income ratios are lower in 2016. They were in 2007. They're also lower than they were in 1998. Yes, they're lower for the top 10% of people. They're lower for the bottom 20% too. There's no such thing as a bulletproof there's no such thing as a bulletproof economy, but this is in pretty good shape, all said and done. So how deep of a downturn? That's another big question, because well, you go out on the roads and they're not very busy. We know retail shops are closed. How much of the economy is actually being shut down by the virus and pullback in spending being driven by the virus? It isn't as much as you think. For example, the GDP Now estimates that come out of the Atlanta Fed, it's a very good tracking indicator. There's no forecast involved. And it was pretty dismal. It suggested at one point in time that economic growth in the second quarter of this year could have been negative 55%. Now, they're already backing off on that because the May numbers were much better than April, and June seems to be better than May. We're looking at probably 20 to 25% overall, which again means about 5 to 6% decline. The driving force here in our economy is the fact that people are not being allowed to spend money, but they're not being allowed either by government mandates or they're not being allowed because of the existence of the virus and their fear of being out in public. But as much as spending has declined, to put that in context, from February to May, overall outlays declined by about $1.8 trillion. But incomes, by the way, only declined by about 1.3 trillion. So actually, spending has declined a lot more than income. That's important because what it means is that since more people are spending less than people are losing income, well, that money is going somewhere. Remember, there's two kinds of folks. There are folks who are falling behind, and that's what all the pessimists are talking about in terms of the inability for the economy to regrow. But then there's all the people who are falling behind on spending, and that pent-up demand is going to help the economy rebound once the virus goes away. Now, the rebound from April's low point is already in place. For example, a couple of days ago, we got the ISM for June. This is for non-manufacturing, and it has exploded back to 57 after a couple of very weak months. Now, remember, this is about growth. What everybody's saying is we're seeing more sales in June. Manufacturing, very similar sort of picture. Growth already coming back in June. The worst is already behind us. The rebound is already occurring. It's already happened. April is clearly the bottom. The economy is coming back because there are no fundamental problems. Take a look at low-income spending. Only down 4% for what it was pre-pandemic. No, low-income families are not starving. They're doing okay. They're making do. High-income spending is down 17%. It's people not taking their trips to Paris. That's the problem. And by the way, all those people are going to take that trip to Paris as soon as the virus goes away. So yet again, all this says is there's no long-run or very little long-run damage. It's just a function of when we get up and running again. Last but not least, how long is this thing going to go? And if you kind of with me where we are right now, let me kind of catch you up. Okay, the virus hit. A lot of people pulled back. We have public mandates going into place, and we saw an amazing contraction in the economy. But the contraction was not driven by a collapse of financial bubble. It wasn't driven by a permanent collapse in consumer spending because they've been cut off from credit, so on and so forth. This was a temporary shock to the system until the virus went away. And as long as the virus went away, people were comfortable. We saw the economy just roaring back because that's exactly what's going to happen. Okay, last but not least, yes, the virus is going to go away, and we continue to think this is going to happen by the end of this year, and we don't see a second wave. So, how healthy was the economy? Very. How much the economy has been hurt? Not as much as you might think. What has the government been doing to intervene? Too much. How long will the pandemic impact economic activity? We thought by Q3 things would be fading away, probably more like Q4 right now. Will there be a major shift in post-pandemic spending patterns? No. You add this up, none of this suggests a 10-year downturn. None of this suggests unemployment rates staying elevated for a long period of time. The economy will continue to rebound at the speed the virus goes away, as simple as that. And when it does go away, we're going to be pretty much back to where we were at the start of this thing. Yeah, it's a recession. Yeah, we've lost a year of growth, but it isn't financial Armageddon. It isn't going to be a world where housing markets are going to collapse. This is not a great recession type scenario. It's not. Here's the message, folks. The long run still matters. It does, because this is an inherently short run phenomenon. It's not an economic collapse. The speed of the recovery is simply dictated by how rapidly this virus fades away into the distance. We've had a second surge. We're at the second derivative. We still think Q4 back up and running. Again, there's going to be some fallout here, but it's all part of stressors that were already in the system, not the pandemic itself. But for me, the true enemy has been the true enemy we've had for a bunch of years here, miserableism. this constant nonstop need to make everything much worse than it actually is, and to scream, to shout down anybody who's trying to suggest that maybe we're being a little narcissistic. Maybe things are a heck of a lot better than we're letting on. Maybe, while we always do a little bit better, things are pretty darn good, and we ought to appreciate that. Look, it isn't that bad. We need to take a step back and have honest conversations about what's going on and what we need to do about it. So here's my ask of everybody out there. Wear your face mask. Turn off the weapons of mass distraction. Don't let the chaos get into your head. It's not that bad. We just need to let this thing burn itself out of the system, put it to one side, and get back to normality. But we can't do that if we continue to exist in this bizarre world of excessive panic. Go out, live your life, be careful, run your business, plan ahead. This thing is going to fade. It is. Thank you very much.